Hey guys, what's going on? Welcome into the video. So this past week we saw the market take quite the drop, including one of the market leaders getting taken out big time after earnings, and that was Amazon stock. So in this video we're going to be going through Amazon stock, the fundamentals, technicals, and future catalysts, and going through why I personally believe it's a no-brainer at these levels and I'm a buyer. So starting out, we're going to take a look at Amazon's letter to shareholders from 2004. This letter lays out Amazon's goal as a business, which is essentially to generate free cash flow to the bottom line. Reading the first two paragraphs of this, Jeff Bezos states, "Our ultimate financial measure, and the one we want most to drive over the long term, is free cash flow per share. Why not focus first and foremost, as many do, on earnings per share, or earnings growth? The simple answer is that earnings don't directly translate into cash flows, and shares are only worth the present value of their future cash flows, not the present value of their future earnings. Future earnings are a component, but not the only important component of future cash flow per share. Working capital and capital expenditures are also important, as is future share dilution." I'll put the full link to the shareholder letter down below as the first link in the description of this video because it is super interesting to read through. Amazon has executed on their plans to near perfection over the last 18 years, but had plenty of bumps along the way, kind of like we're seeing this year in 2022. So starting out, we'll be doing a quick valuation and fundamental analysis based on analyst projections, and we'll be valuing this based on free cash flow multiples instead of the usual net income / EPS, because Amazon has built the business to prioritize free cash flow over the usual accounting of net income or EPS numbers. So 2021 and 2022 have been and are years of high capex spend, which is a big reason the stock price has stalled these past 2 years, but they are expected to ramp up and prioritize their profitability starting in 2023. The stock currently trades for a market cap of $1.26 trillion and is expected to grow revenue at around 15% rate through 2026. Focusing on free cash flow as the main profitability metric, which is on the bottom of this page, cash flow is expected to grow at a much faster rate moving forward than revenue as they start to prioritize profitability more, and this is what makes up the bull case for Amazon stock. So based on free cash flow estimates from analysts, I put this info into a spreadsheet to give us a good visual of what multiples the stock will be trading for in the future. So using the current market cap of 1.26 trillion, the estimate of 2022 price to free cash flow comes out to 68.7, which is expensive no doubt, but then profitability starts to ramp up after that. In 2022, the price to free cash flow would be 27.75, in 2024 would be 17.08, 2025 would be 11.84, and 2026 would be 9.1. Now taking these numbers and using either a forward price to free cash flow of 20 or 25, which are two very reasonable conservative assumptions in my opinion, as Amazon trades for a premium due to the future growth potential. Now using the forward price to free cash flow multiple of 20, as long as Amazon executes on these numbers, that will give you a return of 120% in 3 years from now, which is a 40% yearly return. Using the forward price to free cash flow multiple of 25, that will give you a return of 175% by 2025, assuming that Amazon executes on these estimates, which would be close to a 60% year-over-year return through 2025. Now the risk for this model is if Amazon does not execute. Of course there's upside risk and downside risk. Amazon may blow out these numbers, perform better than anybody thought over the coming years, or maybe they continue to reduce guidance, continue to reduce future profitability expectations, and they don't hit these numbers, which would make the stock cheaper and not get these returns in the future. So that is the risk factor when using a model like this. Though Amazon is a very high quality business, it's not going anywhere, and I do think they have a good chance to hit all these estimates, if not beat. So Amazon's earnings report on Thursday resulted in a 14% drop, which is the worst day for Amazon stock since 2006. A big reason for this is their loss on the Rivian investment and also lower guidance, now projecting between 116 to 121 billion versus the previous estimate of $125.5 billion. Their core retail business has struggled a lot due to recent misallocation of capital from their new CEO, Andy Jassy, who has struggled a lot over the past year with having too large of a capex spend, for example hiring way too many employees and building out too many facilities, two things that they talked about a lot in this earnings report. The company also stated during the report that they are now working on cutting capex spend and should see improvement in the future, though there's still plenty of headwinds in 2022, such as high gas prices and labor costs. One part that killed it at these earnings though was the AWS cloud segment, which is the most valuable part of Amazon's business model. So AWS is growing 37% year over year, and this quarter they also grew margins by 20%, which is massive. The AWS cloud has an absolute massive runway for future growth and isn't going to stop growing for the next decade plus. This chart shows a great visual of the massive customer commitments that AWS has acquired and is acquiring over time. There are also a bunch of institutions now making the argument that Amazon's current market cap would be fair to only to value AWS at, and at these prices you're essentially valuing Amazon's retail business at zero. Now personally, I would argue that using EBITDA multiples isn't the right way to value this company, but this just puts the valuation argument into perspective. Because cloud computing business models have such a large runway for growth, with huge profit margins as well, the sector always trades for relatively higher multiples than other business models do. Now another big part of Amazon's business is the advertising model, which not many people know this, but it generates more revenue than YouTube does. And this is also another high margin business model in Amazon as well. So from Q1 of 2020 to Q1 of 2022, a 2-year time frame, their ads revenue is up 118% and AWS revenue is up 80%. In that exact same time frame, Amazon stock is only currently up 13% from pre-COVID highs based on Friday's closing price. So the market is heavily discounting Amazon's business just due to some short-term headwinds in my personal opinion. Amazon also announced that they're going to have a 20-for-1 stock split back in March, and the stock will start trading on a split adjusted basis on June 6th. So based on current stock price, the June 6th price would then be $124 per share, which likely acts as a big catalyst for the stock when that happens, as we've seen with many stock splits in the past. Another underrated part of this split is that it can potentially lead to an inclusion into the Dow 30, which would be another very bullish catalyst for the stock price in the future. Now taking a look at the technicals, we can see that it's just 13% off pre-COVID prices, which is pretty wild judging for how much growth they've had in that same time span. The trend is definitely bearish in the short term though, as it closed below the 200-week moving average for the first time since 2008. Also on Friday, it closed right above the 50-month moving average, which is a level to keep an eye on if it can hold support in the coming month of May, as that monthly candle will be closing past Friday, so a new monthly candle will open up next Monday. And one last visual after this drop is that it's testing support at the 61.8% retracement from COVID lows to all-time highs. So 2,446 is a big level of support that needs to hold, or if it breaks, that could end up triggering more downside in the short term down to the low 2000s area. Overall though, I personally think that Amazon stock is a no-brainer at current prices, and I am personally a buyer here and would love to add at even lower prices if it was to drop some more. It's such a high quality business, huge runway for growth in AWS, pricing power for Amazon Prime membership, and so many other avenues of growth that they're working on. If they can execute on what they've said about limiting capex spend, this stock has some crazy upside in the next few years when profitability ramps up, and is going to be due for an explosive move once this trend finally reverses back to the upside. Like we were talking about earlier, in the past 2 years, AWS has grown 80%, the ads business has grown close to 120%, and subscription revenue has grown over 50%, and obviously a ton of growth as well in the overall retail business with third-party and first-party sellers. In that time frame, the stock price is only up 13%. Fundamentals are going to catch up back with the stock price in the coming years, no doubt in my opinion, and shareholders of Amazon will finally get some big return on their investment that they have not seen in the past 2 years in my opinion. So that's my take on Amazon stock, ticker symbol AMZN, why I added some shares on Friday and would love to add shares if it goes even lower. One of the best values in big tech in my opinion, if not the best value. Such a high quality business and just a stock that you can own and sleep well at night, knowing that Amazon is not going anywhere. They just got to get through some short-term headwinds, start ramping up that profitability, and this stock could fly in the future. So hope you all enjoyed, hope I provided some value to you. If so, make sure to hit the like button and subscribe button. I would greatly appreciate it. For anybody who wants to join the private Discord chat, that's the second link down in the description after that Jeff Bezos letter. That's up top. And thanks so much for watching all the way through, guys. Really appreciate it. It's a rough stock market right now, but when we bounce back, we're going to bounce back big time. And there's going to be a ton of money to be made on the way back up with Amazon stock and many, many others. Tons of beat down stocks in this market that when we bounce back, these stocks are going to see some huge gains on the way back up. So good luck to everybody this week, and I will catch you next time. Peace out.